All right. Oh, hello everyone. Hello, hello. Okay. Well, seems like everyone is here. Hopefully everyone got the notification. All right. Send them a message on my Discord. Okay. All right. Adjust my mic. Welcome everyone to the technical analysis stream. I haven't done this in a long time, and I did a little poll over the weekend on my CFA Discord channel. It's a private channel, but there's a public side to it. So if you guys want to join, just hit me up on Instagram at chartsfocus1. Irregardless of the poll, I have been kind of wanting to bring this series back. So hopefully you guys are subscribed to the YouTube channel here so that you guys are able to send me any tickers that you guys want me to go over and just do my own technical analysis, right? The thing that I do best for you guys. And so you know, that's kind of the entire objective, the goal for this stream. Now, before we begin, okay, before I go over the selection of your own personal tickers, let me quickly go over the markets and give you guys kind of a quick summarized version of how things played out for us today at Charts Focus 1. Okay, so first of all of January, right, when we even began this new year, I told everyone that we should start to slowly kind of pull back into, you know, actively buying new positions and holding it for the long haul, right? Because again, there's a lot of inflows and outflows of money, and as people are especially starting to try to open up or close certain positions to get ready for a particular new theme or new sector to be involved in this fiscal year, right? And there's gonna be a lot of that activity. Okay, so with that being said, I also told everyone that we should be hedged, right? And the main reason being is that there was a lot of geopolitical factors that played into what I advised, right? And also, just based off of the technical analysis on the S&P 500 ETF or ticker symbol SPY, clearly indicated that there wasn't a lot of good bidding momentum, right? Yes, indeed, we did break out into new all-time highs in the second week of January here, right? So right around these around like 6 candlesticks right here, right? So nice higher highs and higher lows, great. However, once we hit that new all-time high price print, and again, this is what I've also told my members this week from this week's CFO Swing and Watch report. So if you guys are interested in joining that, check out the second link in the description box down below. Okay, so based on this new all-time high price print of $696.09, which again, we got it back to back here on these two daily candlesticks on January 12th and January 13th. Okay, so last Monday and last Tuesday, we essentially got a tweezer double top. And from this point forward, even if volume was there, okay, we didn't end up making new all-time highs from that $696.09 number. And rather, we actually got a nice large move lower that was accompanied by even larger selling volume, right, on this day. And for all of last week, I guess the last half of last week, we had these very volatile intraday price action, and that led into day-to-day volatility, because in the next day after this very nice sell-off day with a good amount of selling volume as well, we had a nice gap up, but this gap up was immediately filled to the downside, and we ended up closing near the lows. And then the day after that, the same thing occurred. We had a nice little gap out this time, and we ended up closing below the closing price of the previous day, right? So this was clearly indicating to me that there was there wasn't just that momentum that buyers needed, right? And it just told me that buyers aren't showing up. And so all of last week, especially early last week, I was telling everyone to stay hedged, right? I've been saying it for this entire month so far. And if you are one of my readers of the CFO Swing Watch Report or a member of the private CFO Discord, you guys should know that. I've been saying that for this entire month, and I've given you guys some suggestions as to what you guys should do as far as hedges or even short positions. For example, like MAGS, right? That we got short on that last week too, and obviously did extremely well today due to the overall market meltdown. But what I'm trying to say here is that there are a lot of key indicators, right? A lot of key signs from a technical perspective and from a geopolitical perspective if you guys were following the news, right? So, global tensions are rising. The geopolitical theater is starting to awaken again, right? In this new year. And just the overall craziness that we're seeing in metal prices are indicating that the markets should be, or at least the overall equity market should be seeing an intermittent dip, at the very least a correctional move in Q1 of this year. Okay, now there are several other factors that played into this, which I've told my members as well, and I'm going to keep that just for my members. But if you guys really want to know, make sure you guys become readers of the CFO Swing Watch Report. Again, the link is down below in the description box. It is the second link. It's very hard to miss. All right. So, when it comes to a large move like this, where we move more than 1% to either direction, but obviously currently we moved more than negative 1% to the downside, and we ended up closing at negative 2.04% with obviously accompanied by a large amount of selling volume, which makes sense because we also ended up closing below the daily 50 SMA. So this is the first break below the daily 50 SMA, where again we got this previous break in December 17th and on November 20th. Okay, so I guess I should say the official break was November 17th. Okay, so it's kind of interesting to see that we have kind of similar dates here, right? So November 17th, December 17th, and then we have January 20th, right? And it's pretty interesting to see that we had these breakages below the daily 50 SMA that resulted in some massive volume to come in, a massive amount of selling volume. So as I've told my CFO Swing Watch Report members, okay, for this week, I'm going to give you guys a summarized version of what I told them. Obviously, there's a lot more detail in what I'm about to tell you guys, but again, that's reserved for my members, okay? I'm just going to expect a slight pivot at these current lows that we made today. Hopefully, we were able to retest this major 675.50 level, and then we pivot tomorrow morning, and we start to kind of consolidate for the rest of this month around this daily 50 SMA. That's kind of what I'm expecting to see, rather than trying to attempt for a new all-time high, because again, today's massive gap down and today's ultimately the failure of buyers and the price reacting to buyers to fill in this massive gap down area clearly indicates that buyers are not willing to step in above the daily 50 SMA. Okay, so again, I just expect a nice red to green move tomorrow once we retest the 675.50 level, and yeah, we can go from there. Okay, so that is kind of the up-to-date analysis for you guys on the S&P 500 ETF. And also, if you guys remember back in early December, I think I mentioned it when we were talking about this ascending channel here. If you guys go back to my previous streams, I specifically told you guys to please have these three levels on your charts, on your SPY charts, right? 686, 675.50, and 670s. These three whole number levels, okay? And I told you guys that these are very critical levels that we have to pay attention to, especially if the markets do not try to see a new all-time high into next year. But obviously, we did get that new all-time high price print, but ultimately, there's a little bit of a little bit of nuance to my analysis from early December as we hit that new all-time high price print, and then we immediately started to see a nice injection of selling volume that ended up with a huge move to the downside today, right? So again, this is pretty interesting to see. Right, it seems like overall what we're forming was, in hindsight, right, we were forming this very massive, well, obviously I did see this before. I'm not saying that I saw this, I'm seeing this now, but in hindsight, right, since we did have this breakage to the downside, even though we were already protected and we were already short on some tickers that well, that mattered, that will move on an overall market downside move, like SPY and ticker symbol MAGS. If you guys don't know what I'm talking about, go ahead and take a look at my Instagram story that I posted today, a couple hours earlier, well, a few hours earlier, and you guys will see what I'm talking about, okay? So, obviously this is a massive rising wedge, and that is an inherently bearish chart pattern, and we had a nice official break to the downside, confirming that yes, indeed, this is a rising wedge, right? And you know, again, I'm expecting some buying to come in at 675.50 to provide us some, at least the very least, well, at the very least, actually, at the minimum, right? We see kind of an intraday relief bounce, right? Because if you go on the 2-hour or even on the 4-hour or any of the hourly time frames, right, things are looking a little bit oversold, right? So if we're able to retest 675.50 tomorrow and pivot, then at the very least we can have a nice short-term intraday bounce. Okay. And with that being said, let's take a look at, okay, VX, okay, and that is, if it's going to open up here, the VIX futures, okay. So I kind of want to give you guys this, oh, if it's going to load or not. I don't think it's going to load. Let me see. Hopefully it loads. Oh, I think our trading view is kind of having a little a brain fart here. There we go. I had to kind of insult trading view there to have it load. Okay. Oh. Nope. Nope. There we go. Jeez. Alright. We're back. Okay, trading view was kind of glitching there. So, if you go back to, well, if I overlay what I just told you guys on the S&P 500 ETF and kind of give you guys that same analysis that I've done on the VIX, right? If you go back to the December 17th date, right? And in this week, from December 15th through December 19th, I did a live stream, okay, on that week, and I gave you guys this kind of trajectory for the VIX futures. And funny enough, I ended up correctly pointing towards where we should be seeing a relative bottom, quote-unquote bottom, forming for the VIX futures, right? And we ended up, again, I said this as well in that live stream, that we should be seeing at least the VIX futures sitting around 18, right? And then come today, or I guess last night, we ended up gapping up and having a massive expansion in market vol, and this affected the VIX open today as well. So, you know, I even told you guys back in, I think this is like early Q4 as well, that that the VIX has kind of this change, this shift in where it wants to have kind of this magnetic pull, right? And what I mean by that is that the value of VIX continues to want to go towards that value of 20 and higher, right? We've been seeing this affinity towards this 20 value. And again, that's very significant because that usually indicates that a market correction is imminent if the VIX stays at or above the value of 20. So any of the CMTs out there, you guys know what I'm talking about. So and there's a specific timeline for this as well, and a specific percentage too, as to how what the average equity downtrend could be when VIX is above 20. But I'm not gonna go into that for now. But I can go into that in another stream. But yeah, there's a whole nother world that involves the VIX and the overall equity markets. So you know, for the VIX here, again, this affinity to 20 and higher values is going to cause a lot of uncertainty, and most importantly, fear, right? The sentiment of fear that will drive the markets for Q1 of this year, right? And that's the reason why I titled this stream with this specific title, right? That we could be seeing this first market crash of 2026, or at the very least, a textbook pullback, or excuse me, textbook correction of 5 to 10%. In all honesty, guys, personally, I think there's going to be a negative 10% correction for all of Q1, or at the very least, that will happen during Q1, during the first 3 months of this year. And it looks like today might have just been a great start to that correction, right? So, you know, again, please trust the levels that I've shown you guys here. These levels work. I've been telling you guys this for the past, you know, quarter or so, right? I've been showing you guys my exact daily time frame chart here with all the levels that I've drawn for you guys. And again, you guys should know by now, if you guys have been with us for a long time, or if you've been a subscriber to this channel. Again, we're almost at 620 subs now. It seems like we're going to be hitting 700 subs, and very soon, hopefully before the end of this quarter. So hopefully that can come sooner than later. But again, thank you guys so much for subscribing. If you guys haven't hit that subscribe button yet, and if you guys have been liking what you're hearing so far, or maybe the other videos that you guys watched, make sure you guys hit that subscribe button as well. All right. So again, phenomenal growth on this channel. And again, please, if you guys have been with us for a long time, you guys should know that my levels are very accurate. They tend to work quite well, especially when it's regarding, you know, liquid tickers like the S&P 500 ETF, right? So yeah, that's kind of it for this first segment. And the second segment here, I just want to go over some tickers that you guys are interested in having me go over and kind of do my technical analysis on your tickers. So if you guys are interested in doing that tonight, make sure you guys hit that subscribe button, and then you guys will have access to the live chat room from wherever you guys are watching from your phone or from your desktop. So go ahead, send some tickers that you guys want me to go over. Right, so this is kind of a little throwback to 2021 to 2022, where I did exclusively these technical analysis streams where I just went over all of your guys' tickers that you guys want me to go over. So if you guys have a selection or a list of tickers that you guys want me to go over, now's the time to do that. So please hit that subscribe button and join us in the live chat room. Okay, I think my audio is still okay. Anyone who would like to go first here? Oh, all right, do nothing. What's up? Yeah, so BSX. Okay, let's go over BSX. Yeah, so BSX. So this is clearly a medtech leader. I mean, I went over this one, and there is a live stream, or I think it's a video, live stream or a video, it doesn't matter, on this channel where I talked about BSX because it was one of the main ideas on the previous CFS Stream Watch report. And BSX so far hasn't, well, I would say, well, my levels still matter here, obviously. I mean, if you just take a look at today's price action, I mean, take a look at this, 91.50. Right, this support major whole number support level is now being used as a major level of resistance because today's high of the day was 91.54, and we had a clear reaction off of that resistance level and previous support level. So let me actually take a look at this from the weekly time frame, right? So obviously from a weekly time frame, you can clearly see that this one has been kind of suffering for the last, well, I would say for the last quarter and a half of last year, right? So the entirety of quarter 4 and a little bit of quarter 3. However, this overall long-term trend to the upside can still be sustained because if you take a look here, I mean, I pointed it out with these arrows here, but we have major pivots here, right? We had a major pivot at 86 on this candlestick. And now we have major pivots around this 88 whole number level here, right? And this is also a very major level of support back in November of 2024. So do not think, if you're looking at this, I think for BSX, there's a good chance that this year medtech companies can see sort of a kind of a retaliation move, a retaliatory move to the upside. Because again, a lot of these medtech leaders saw a little bit of a major sell-off into the end of last year. But especially for BSX, which is clearly there's a fundamental reason why this is a medtech leader. Again, please read that report where I went over BSX as a major idea. But BSX, from a technical perspective, again, there's still a lot of ways that bulls can try to save this longer term uptrend that BSX has been on for years. Okay, so I mean, if you just scroll all the way out, right? I mean, this is from the 2010s. Okay, so obviously BSX had its moment with this massive breakout back in 2023, but ever since 2023, just been blue sky breakouts consistently, right? And so if buyers are to save this and find a potential, well, currently potentially a higher low, right? Because this low right here was at 85.98 compared to today's current low at 87.03. There's a good chance that maybe we can shift our trend line here, this ascending support trend line, to kind of connect these two trend lines, right? This is kind of a stretch here, but I mean, if BSX wants to consolidate, right? I mean, just massive swings like this, right? It's just a general big picture perspective. I wouldn't mind that at all too, right? Where it leads into another fresh, blue sky breakout to the upside into new all-time highs, right? Now, what's interesting about BSX is earlier today when I was looking at the call option flows, I think BSX got a big, massive order. I mean, if you just take a look at the volume too, BSX clearly major relative strength name, and it kind of makes sense, right? For any of all the SaaS names out there as well, and including medtech companies like this that had major sell-offs heading into the end of last year and into this new year, it just made sense that they would have a little bit more relative strength compared to the other tickers, other leading tickers that have been following the market step by step and kind of have parallel price action, parallel volatility to the markets. It would make sense that these specific stocks that have been already battered to the ground for the last quarter and a half had a lot more strength today, right? Because it makes sense for money to move from leaders to laggards when markets are in a downfall, and especially when it's involving defensive sectors and value sectors like medtech, and specifically this ticker BSX. So do not think that that's a very good ticker to look at for, at the very least, this first quarter here. Okay, and I think let me try to find it here. Yeah, so there was a pretty large buy. Oh yeah, so the volume on this specific contract, it's over 11,000. So we have to check the OI tomorrow to see how much of this volume is carried over. But the current OI is at 2,982. The Greeks are fine too. The delta is okay. Yeah, so this contract is here. Make sure you guys write this down, or do nothing, write this down. It's the 95 strike call contract that expires on April 17th. Okay, and if you guys are looking at the options chain for BSX, this is a pretty significant order here. At the very least, a pretty large, unusual option activity, a UOA, regarding the volume. So we really have to check the OI tomorrow. There's a nice little OI check on this specific contract to see how much of this volume is carried over to OI. So make sure you check that. Yeah, so this one could be interesting here. And again, 95 isn't that far away, and it seems like whoever got this crap ton of contracts here to open up this position on BSX is going to be holding through earnings, since again earnings is on February 4th, and this contract matures on April 17th. So that's 2 months forward, right? So maybe this trader is looking to potentially just have some more time as it potentially as the trader potentially plays a rise up into earnings, or again, like I said initially, maybe this trader is just trying to grab BSX at these current lows here, which is again the previous lows and last year's April's lows, and just hold it into earnings, through earnings, and then some, right? And maybe if this trader gets lucky, the earnings reaction can be a very massive move to the upside. Who knows, right? But either way, this overall volume is very, very interesting, right? Since last Friday was OPEX. However, what we're seeing here is on last Thursday, there was a massive amount of volume here, which made sense because again, this $88 level was a massive significant support level that was also retested at April's lows. I mean, you guys can clearly see it here on the daily time frame, right? So anyways, I'm just saying the same thing over and over again. So my point here is that BSX is still a very good medtech leader, and for any of my CFO Swing Watch report readers out there, please read that report again that had BSX as a major idea. The fundamentals that I went over on BSX were absolutely amazing. So please go read it on that 3-pager analysis in the CFO Swing Watch report again. Okay. Hey Farhad, it's been a long time, man. Thank you. Okay, so do nothing. That's kind of it. Yeah. Hopefully that was helpful. Helpful, not hopeful. Well, I guess hopeful and helpful. If you do have PSX, right? Okay, awesome. I see your emojis there. Okay. All right, and let's see. Is my live okay here, guys? Is everyone able to hear me okay still? I think my connection is kind of wonky here, so hopefully I'm not going in and out as well with the audio. Just let me know, guys, if you guys can hear me without any interruptions on my audio. Okay, I see you guys' reactions there. Okay, perfect. Okay, all right. Okay, Farhad, I'm gonna go over do nothing. Thank you, thank you. Okay, you're welcome, man. So, yeah, Netflix. Yes. Okay, so I guess I have Netflix here. I'll put Tesla over here. So Netflix had earnings today, and obviously Farhad, yeah, since you are a reader of the CFO Swing Watch report and you're a member of the CFO Discord as well. And what that means, guys, for anyone who's watching that is just a subscriber to the channel, or a non-reader of the report, or maybe a public member of the CFO Discord channel, once you guys become a reader of the CFO Swing Watch report, you guys can get additional access, well, full access to the private CFO Discord channel. So that's what I mean. Okay. All right. So I did talk about Netflix after hours here, Farhad. If you take a look at that strictly, I have been targeting, 82.50 for a long time. So I think one of the other members, one of the other members a month ago was asking about Netflix on the Discord channel. Yeah, everyone has to join. Yes. Okay. He asked if, where could be a good dip buy for Netflix. And I specifically told him that this 82.50 level is a very, very significant level. I mean, if you just go back to 2025, right? This level was a significant level twice, exactly twice, right? I mean, just take a look at it here, right? Right here, okay? And right here, right? This is the April lows, okay? So, you know, this is pretty significant, right? And guess what? We actually got a third confirmation that this significant 82.50 level is, well, significant after hours today on the earnings reaction. So on the backbone of today's Netflix earnings reaction, do nothing you said. Yeah, second that, yes. Oh, are we back? Okay, we're back. Okay, so do nothing, thank you for that, and Farhad, thank you for that as well. So I believe Netflix began to, so currently overnight, it's sitting at 82.71. So it's literally set, couple cents away, pennies away from 82.50, and it continues to hold this level, right? So I am going to be expecting mostly, Farhad, long-term buyers at this 82.50 level. And the reason why I'm specifying that is that if we don't see any short to mid-term buyers, so for people who are looking to swing trade, right, people who are looking to maybe even just day trade, so day trade buyers and short to mid-term buyers, right, again, specifically buyers, if they don't appear, and if it's only long-term buyers, there's still a very good chance that sellers are able to come in tomorrow and continue to push the price lower for a longer period of time, a little longer than what buyers would like, right? And what that means is that, well, the price could be consolidating around 82.50. Maybe it does something like this, right? This is just my conjecture here, right? So it kind of creates very tight lower lows and lower highs that ultimately ends up giving us kind of this descending channel, or maybe a falling wedge, right? Those are two patterns that come out usually when we have these massive gap downs and the price begins to base around a large significant support level or demand area. Okay, so again, a descending channel or a falling wedge, right? Remember that. And the reason being, well, not just even the reason, but the overall reason why I am suspecting that this could occur, especially with these two specific chart patterns, a descending channel and a falling wedge, is that, well, it could also have this correlation to technical indicators, specifically the RSI, right? And I think I have the RSI here, yeah. So the RSI could start to have a nice hidden bullish divergence. So once we start to see potentially, again, this is just my little hypothesis here, if the price begins to make lower lows and lower highs in a very tight manner at this 82.50 level, and so around, if you guys want a range, 80 to 84, all right, that's the range that I gave to, well, I gave 82.50 to 84 to the member that asked this question a month ago, but if you guys want a range, okay, 80 to 84 will be kind of that range where the price should be consolidating, okay? And once we see these lower lows and lower highs being made, the RSI could be having its moment where it starts to make higher highs and higher lows. So that will be a nice hidden bullish divergence that will ultimately lead up into kind of this massive push up higher from this 82.50 level. Does that make sense, Farhad? Hopefully it does. If you're still here. Okay, so again, this is a very critical level. Obviously, I can also be very, very bearish, right, based on the earnings report that we got today, especially with its guidance, right? They're ending their stock buyback program for now as they look to navigate this Warner Brothers deal, which again, both companies have basically came back to the table to kind of edit their deal again. And initially, Netflix had a very nice reaction to that last week and this week again, today this morning, in fact. But again, earnings reaction trumps this deal so far, and based on what they've done with ending their stock buyback program and trying to focus on this deal to see if it can go through. I think that's what kind of led into that reaction to the downside, and the overall guidance was a little meh, right? Even though they beat revenue and earnings in a very stellar manner, and their overall expectations for, especially for the ad revenue, which is, again, that was very recent for Netflix, has grown spectacularly, right? And so this ad revenue for Netflix seems to be going pretty well. Obviously Netflix can, again, it can go down more than 82.50, which is, again, that's why I specified that if tomorrow it's the only buyers that are present are long-term buyers, there's still that short to mid-term sellers that can push the price lower, right? There can be that very top-heavy supply area that can continue to push the price lower, even if long-term buyers are pushing and trying to pivot the price over this 82.50 level. Okay, and for that, awesome. Okay, hopefully that made sense as well. Okay, so again, 82.50, very, very strong level. It was a very strong support level for 2025. And if we break below 82.50, the next major level that makes the most sense to me will be 69.50, which is the previous major all-time high level. It's a multi-year level, might I mention as well, from 2021 all the way up into 2024. Okay. Well explained, looking for accumulation areas for long term. Yes. So again, far ahead, as it is with any other charts that I give you to all my readers out there, please try to focus on the levels that I'm giving you guys on the chart. So far ahead, make sure you have the 55 level here, 69.50 level, and most importantly, 82.50 level as well on your chart. Okay. All right. So with that being said, let's go over your next ticker, far ahead, Tesla. Okay, so let's take that MACD out for now. Okay, so I know it's a little bit messy here, but we're gonna be focusing on the shorter term here. So Tesla has obviously been in some hot water, right? On the news as well. Okay, there's I dug deeper into some of the actual factual news about Tesla and the reason why it has so many lawsuits, right? And Teslas have a huge problem with their door handles, right? As it is with other EVs, but Tesla has been a huge major contender of killing people with their cars because people can't get out. But that's not the only thing though, okay? Elon Musk, with his dive into politics in 2024, has obviously kind of started to bite him in the back just a little bit. Because if you take a look at the sale numbers and the overall revenue for Tesla in Europe, right, it's down a lot, double digits in every single European company, and that's not good, right? Because again, there's a good relationship with Europe and China when it comes to trade, especially with EVs specifically. Again, Tesla, right? And so if the European countries aren't seeing Tesla as a good EV maker due to its CEO's current political takes, might I say, okay? That's not good for the longer term because, again, Tesla has been trying again to be a leader in a very hard market landscape in China, right? China's EV market is very competitive due to its amazing EV cars that are selling for very, very low prices compared to the US, right? And it just makes sense, right? Because China has a central government that controls every line of production and manufacturing, and there's also price controls, right, from its own central government. So that makes sense, right? Obviously, that's not, I'm not saying China is greater because of that, but they have a better edge when it comes to Chinese EV companies and competitiveness compared to Tesla, where they have to manufacture cars their own way, and then they have to try to sell it to a different market that is completely different. For example, if you're from even just Europe and the US, right, or North America. So China has become a very challenging landscape for Tesla, and yeah, so that was kind of my little gist there as to what I've been reading on Tesla. And technically, all right, it's kind of lining up to what I've been reading, right? Because there's a good reason why we're starting to see this breakdown occurring, because we are seeing my infamous, well, not mine, but the infamous, okay, it requires a lot of trend lines here, but but this is a nice, what we like to call a nice diamond topping chart pattern. All right, so if you want me to complete it, all right, guys, I'll go all the way out here. Okay. All right, so we tend to see these diamond top patterns during an inflection point, specifically the bigger picture perspective inflection point. Okay, but it's something that you guys should be focusing on if anyone out there is looking at Tesla, because this is significant, and especially with earnings coming up, I would say you should wait. Right, earnings are coming up next week, at the very last week of January, and I would say wait to see how Tesla reacts. Because with this, again, the last one, well, not including this week, but last 4 weeks here, okay, there's been a clear sell program as we head into earnings. All right, the very first earnings here of this year, which again is the quarter ending of last year, right? This is the fourth quarter earnings for Tesla that's being reported this year, right? So this sell program should be a cautionary sign for you guys as we head into this earnings reaction, because again, even if we have an upside reaction, there's a lot of supply up here, right? And this overall topping chart pattern is not good either, right? So even if I'm gonna be optimistic about this, there's just a lot of supply here, right? I mean, even just within the massive range from 420 to 463, which again, these two levels are very significant for the last couple of months, right? The last 3 to 4 months. There's been a lot of sell programs that occurred just within these two levels here, in between these two levels actually, right? We see it here, and we see it here as well, right? So, you know, well, now I guess now we can include here. So we have 3 different instances where a bunch of supply and a bunch of sellers decide to pop right back in order to not let buyers get ahead of themselves, and that's what's happened again very recently in the past 4 weeks, not including this week. So, you know, I think Farhad, you should wait, and just, again, it's okay to wait, sit on your hands, see what the reaction is with earnings on Tesla, because we already know that the overall numbers are already bad. So maybe the past 4 weeks of the sell program has priced in the very bad numbers that we're seeing coming out of Tesla regarding its Europe branch, I would say, this overall Europe sales and revenue, and maybe there could be a small positive reaction. But then again, right, nonetheless of the overall well, I guess irregardless of the earnings reaction, we are still within this massive topping diamond chart pattern. Okay, so again, these are the 3 levels that I've given you guys in the I think it went back in like October, I think. Okay, well, no, I gave you guys these levels back in early 2025 as well, I remember. Yeah, so these levels are still very much in play. Again, if Tesla's gonna, well, it should, if it follows the overall market action, we should see a pivot at 420, and ultimately it should just do whatever it wants to do, right, leading up into its earnings next week, because you shouldn't be trying to play Tesla if and only if you guys are looking to scalp or play any intraday chart patterns. Okay, Farhad? Does that make sense? Okay, so again, take what I said about Tesla regarding, you know, the overall news about it with, well, just don't take it too seriously, because again, I was reading very opinionated pieces, but again, they're real factual pieces, and again, we also have those numbers from Europe, okay, and obviously it's kind of Tesla has been struggling in China, that is very true, or the overall Asian market, especially like in India, where I think they sold only like, what was it, like 6 vehicles in India, right? Which is kind of crazy, and all of 2025 or something like that. I read that number a couple months ago. But yeah, so technically though, the warning signs are here. Okay, again, these three sell-off programs that we saw just between this massive range from 420 to 463 is it's a little wishy-washy for buyers. Okay, especially as we head into earnings. Okay, so there's gonna be a lot more uncertainty. All right, so hey Bueller, what's up, man? Nice to see you here, man. So if you guys don't know who this is one of my long-term friends here. I haven't seen him in a long time too. So yeah, welcome, man. But yeah, that's kind of it for this stream, guys. I mean, I think this is a good first video, this comeback video for the technical analysis series I'm looking to bring back, since again I haven't done this since like 2022, and again I got a lot of good responses over the weekend that I should be doing this again. So yeah, leave a thumbs up. Thank you, man. So yeah, I will definitely look to add this back to the live stream schedule, and obviously give you guys the official dates and times of when I will be doing the specific technical analysis streams, where I just go over, well, I give you guys initially the market analysis and then go over your own personal selection of tickers and do my own technical analysis on it for you guys. Okay, so if you guys are new here, make sure you guys hit that subscribe button, if you guys, especially if you guys have stayed until the end here. And yeah, I was just planning to do just an hour of the stream today. So again, thank you guys so much for watching. I'll see you guys most likely next week. I'll be back on my regular streaming schedule, Mondays and Wednesdays. Okay, so again, I'll be live 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time on Mondays and Wednesdays. Don't forget that, all right? And yeah, good luck tomorrow. Hopefully my overall market analysis on ticker symbol SPY was also useful, and hopefully that will be applicable to the rest of this week's trading for you guys, and for any of my CFO Streaming Watch Report readers and any of my CFO Discord members as well that are on here. I'll see you guys tomorrow morning. I'll see you guys, well, I guess right back stream is done. Okay, so good luck, and I'll see you guys next Monday. Thank you so much for watching.